Good morning and welcome to BSAD 320, Exploring Management, virtual style. So we're going to record a few lectures for you covering each chapter. And I hope you find them helpful. They're not a substitute really for doing your reading and going through the PowerPoints. That's really going to be the best way to get the details. I'm going to try to hit the highlights for you to make sure you know what it is you're supposed to be taking away from each chapter. Today, this morning, we're going to talk about controls and control systems. And as we've talked before, control systems are one of the four key management functions. The key management functions that we've already talked about are planning, and this is a second one. Control begins with where are you trying to get to? What are your objectives? And then measuring your performance in whatever you're doing, comparing your results to your objectives, and then taking corrective actions. Not very complicated, but generally a lot of times these things get missed, interestingly enough. So again, what are the goals? How are you doing? How are you performing against those goals? And then what do you need to do to fix it to make things come more in line? And so we want to look at this as a dynamic, ongoing, constant process, not something that starts and stops. We've talked about planning and leading. Now we're talking about controlling. Again, it becomes part of a full circle process. And the way this kind of all fits together is that if you think about it, the leaders and the team plan, they set the goals. The leaders organize and inspire people. We now have to control how the company is doing and how to take the corrective action to make sure that the company is able to fix those things which aren't working. So within those, if you go back and let's see if I can. Here we go. Sorry, I'm still learning my computer. So if you look at the four, now we're going to skip down to the bottom one of those four, which is the control process. And it starts with the standards, the objectives. What are we trying to achieve in terms of quantity, quality, cost? How much effort is required? In other words, where are we going? What are we trying to achieve? And what is it going to take to get there? The second step in the control process is actually to measure how you're doing. I know I bore you with my sports analogies, but it's like being a track star or a running track. Your goal is to run a 9,500 meter dash or 100-yard dash. Well, you determine that you have to work out this much, you have to work with the coach this much, et cetera, and then the second step is to practice, and then measure what you're doing. Companies are the same way. And so you want to measure accurately and in timely fashion during the second step of the control process how you're doing. The third step is basically comparing desired minus actual. If you're running a 10 flat, you want to run a 9.5, you're 0.5 behind. And so same with companies. If your goal is to sell $1 million and you sold 800,000, then you're $200,000 short. And so this is where you then detail what it is that you have done or where you are in relation to your goals and objectives, with the idea that now you can determine how to fix it. If you're ahead of goal, then that also might call for a resetting of the goals and objectives or some other action to take into account the fact that you're actually overperforming. So the next step is to take that action, right? Is to take the actions necessary to either basically to get on track. Management by exception is a term you'll hear basically when you have a set of goals and you're not meeting those goals, management by exception says, well, here's it tells you the thing that's not working or the goal you're not meeting. And a lot of managers, what they'll do, as long as they're meeting goals, they don't do anything. And that's actually can be dangerous as well, because things then will creep up on you. But having said that, the step of the 4 of the process is to take the corrective action. Well, first is to determine what it should be, and then to take corrective action. So that's a summary of the control process. It's not a complicated concept. Establish a goal, measure your performance, compare those two things, and then come up with a plan and execute a plan to fix whatever is wrong. So there's a lot of different types of controls. I guess ways to think about controls. One are feed forward, what they call feed forward controls. Basically, this suggests that when we set those goals and objectives, we make sure they're actually reasonable and correct goals and objectives, and that we have the right resources available. This is the effort to anticipate problems and solve them before they occur. Not to pick on this virus thing, but if you think about it, when this first started, the government did not react quickly enough to foresee a shortage of testing. And so they did not execute feed-forward controls. They should have seen what was coming and then tried to put resources available to avoid the problem that we ran into, or that we're still into, which is the lack of testing. The second step, or the second type of control, is concurrent controls. This is where you're actually dealing with the processes as you're doing them, and you're fixing things basically so-called on the fly, basically ensuring that the right things are being done. So you're monitoring however you're doing whatever you're doing and solving problems as they come up. And then the last one, of course, and this is very important, is that at the end of the day, when you're done, you need to make sure, one, that your results are what you wanted, and then secondly, you go back and you solve problems that occur during the time frame that you're working in. And so, we want to be able to start at the planning side, anticipate problems, and try to fix them before they happen. We want to be on vigilant watch to deal with things as they occur. And then we also want to do post-mortem so that we can fix things after the fact, so that the next time something happens, we're better prepared and things go better. We're going to talk a little bit about internal and external controls. Internal controls really focus on the individual. It's kind of the things we've talked about in terms of motivating people, having them participate in the planning so that they have a purpose of belonging and understanding of exactly what's going on. Your little assignment on the importance of planning was all about this, that if you want people to buy into what you're doing, you probably need to get them involved early on in the planning process. External control is a different type of control. It basically has to do with control of your people through policies and procedures, the so-called bureaucratic controls, budgets, organizational culture, which often will influence behavior, and then actually, how do things come out? In other words, how are you doing in the marketplace? How are you competing? Do you have feedback from outside of the company that will change the behavior of the people working there based on the results that you're getting? So you have internal controls where you're motivating people, dealing with their inner desire to work, if you will, and then external controls, which are the rules, the procedures, the organizational culture, etc. So when we talk about setting those goals, and basically integrating planning and controlling, because if you think about it, they're pretty tightly connected. If you're setting a goal and objective, you have to plan to meet it, and then the controlling part just comes immediately, kind of hand in hand with that. And so management by objectives is an old term, been around for a long time, but basically it says that we should, when we're managing people, we should manage with the objectives in mind, so to speak. So basically, the concept of management by objectives is really, again, not very complicated, but it's an effort to bring people who are going to be executing for you into the planning process. And you start off in a joint session, if you will, planning the objectives and determining the proper actions. And then people go out and do their jobs, whether it's leading, whether it's a member of the manufacturing team, whatever it is. And then as you're going, if you remember concurrent controls and after the fact controls, you go back to jointly reviewing and going over what happened and what needs to be changed. And the whole idea is that this becomes more of almost like a organizational and personal development plan rather than just always a assessment, if you will, of, did we do, individually, did you do your job or not? So it becomes much more of a team building type of approach where you manage together the planning and the control surrounding the actual individual efforts that people are taking. Now, one of the things that's really important is to make sure that the objectives are clear and measurable. This is a good example. I've worked for companies and the boss will say, I want you to increase sales. Well, that doesn't really mean anything. I mean, does that mean by $1 or $1 million? Same with personal development. I want to get faster again, or I want, give me a specific. And so in the past, we've talked about SMART goals. Here's another kind of a summary of what they should be. Be specific, make it measurable, try to quantify it if you can, make it timely. If you can put a date on it, be realistic. Don't try to promise things you can't do. It's always fine to add a stretch goal. In other words, be realistic, but then, shoot for the stars, so to speak. And remember that at some point, these goals should be simple. They should be understandable. They should be clear, and they should be something everybody can that you can communicate them easily, and everybody can understand them. So we've talked about the management by objectives. We've talked about setting good objectives. We've talked about different types of controls. And then there's another sort of level, which are some of the tools and techniques that people use as they're doing their control. And this is where, for those of you who are thinking about doing accounting and finance type stuff, or financial modeling, where those numbers actually come in as part of the control system. Accounting measures history, and so that's why it's so important. And so just going through, some of the tools. So one of the tools, and again, if you Google total quality management, you'll find thousands of articles. But basically, this is an overall field of study, really almost in a project management type course or course of study, where we're basically looking at processes and trying to make them better. Continually improving ways for people to work and improve quality and performance and timeliness. And there's lots of different types of total quality management approaches, but they all have generally the same goal, which is looking at how we're doing something. It's like the concurrent control where you're reviewing what you're doing constantly and evolving your processes to make them constantly better. A lot of companies use Gantt charts or PERT charts. Again, these are project management tools which I can't tell you how important these are in terms of laying out projects for, how do you get something done and in what order? And can you divide the project up into modules that can be worked on separately by different people and then brought back together, and et cetera. And, the PERT chart down below, and by the way, you can take a whole class in this stuff, but a Gantt chart's just a time chart, if you will. And a PERT chart really talks about the critical path. So you're mapping out, key events and then days between those events. And then that eventually will give you the critical path that's going to control actually how long this project takes. And that can be used once you have the critical path to maybe move resources around to get something done that didn't seem like it needed to be done. But then when you looked at it, it's clearly something that's going to hold everything up. Inventory control is another key metric. So obviously inventory is not something that a lot of companies want to have on hand, because basically it's dollars sitting on the shelf. And so just-in-time scheduling is one way to manage inventory, where you get it just before you're using it. An example of this, years ago, Toyota had a really good just-in-time inventory process for building their vehicles. And it took them from beginning to end to build a car like 6 days. It took GM like 20. And the point is that was because GM didn't have a supply chain and a just-in-time inventory approach that allowed them to bring things in just when they needed. And that was a huge competitive disadvantage from a cost standpoint for General Motors. This is 10 years ago. Another tool that companies use is a break-even analysis. You'll hear this term a lot. Basically, this is where, if you're trying to calculate the point at which your revenues cover your costs, so you're breaking even. And we can talk about how you apply that. We do this in my entrepreneurship class a lot, because the whole thing is how fast can you get to the point where the company can sustain itself. And so the break-even point basically is the point at which the revenues cover all of the fixed costs, the costs that the company will incur whether or not it makes anything. And so that's again a pretty critical tool that companies can use, particularly when they're getting going or introducing a new product. The balance sheet and the income statement, again, out of accounting. The income statement tells you whether you're being profitable or not. The balance sheet tells you a lot about your assets and liabilities. I'm not going to spend a lot of time going through these. Again, these are key tools for understanding. It's amazing how little a lot of entrepreneurs actually know about what's going on from a number standpoint in their company. And for example, if your operating profit on your income statement, meaning, if your gross sales or your net sales are negative. In other words, if you're selling a product and you're losing money. And I've actually worked with companies where the entrepreneur didn't know what was going on with that. So that every time they sold a product, they were losing money. You can't do that for very long and survive. So the use of the balance sheet and the income statement is critical and tells you a lot about what's going on in your company. A lot of financial ratios, and again, I'm not going to go through all of these, but a lot of these are snapshot ratios that will tell you a lot about how your company is doing. If you look at your debt ratio at the bottom left there, for example, total debts divided by total assets. If your debts are way higher than their assets, that means that you have more debt than you can pay back if you had to. Inventory we talked about a little bit. You want high inventory turnover if you can. In the profitability, just that example I just gave you, you want your net profit, your net margin to be as high as possible. And so these are all critical control tools that a manager has at their disposal. What I think is really important is to recognize how important these numbers are to understanding what's going on in your company. And most critically is that when you see the numbers, you can look at them and then go back to what's going on in your company and figure out what is causing the issues, if there are some, and then how do you fix them. And then finally, we have a balanced scorecard approach, which adds to the financial numbers things like customer satisfaction, things like how well the company learns or introduces new products. So in other words, it introduces ways of measuring the company's success that go beyond just the financial. So I'm going to wrap there for this chapter. This is a pretty critical chapter, and those numbers and those tools that I talk about there are really something you need to focus on as you go forward with your business education, but also your business career, because those are the tools you'll have to allow you to make the changes, to monitor the progress, and make the changes that you need to meet the goals and objectives that you've set.